Hello guys, welcome back to my YouTube channel, and in this video I'll be talking about chart patterns, which is a very important topic when it comes to analyzing the cryptocurrency market. Chart patterns simply is about some patterns that are formed on the chart, and there are some kind of price action strategies that traders use to analyze the cryptocurrency or the forex market, and that we use to place our trades to be able to get reasonable decisions to make money from the internet. So if you are just getting to see my channel for the first time, this is Arab the Plug, and on my channel I talk about how to trade the cryptocurrency market and the forex market, and I also talk about personal finance. So if you're interested in any of these things I've mentioned, ensure you subscribe to my YouTube channel and make sure you hit the like button on this video, and let's get right into it. So in the previous videos I talked about support and resistance, candlestick patterns, candlestick chart, and every other thing, and this video I'll be talking about chart patterns, because these are some of the things that are formed on the chart that traders use to make accurate trading decisions whenever they are about to place a trade. So chart patterns is a very important concept that a whole lot of traders use, and in the crypto market we have a whole lot of chart patterns. So chart patterns are a lot, and you cannot actually master all of them. That is why it is important that you look for some of them that have stood the test of time over time, that people have used and that have made people a lot of money in the market. So as far as I'm concerned, I usually trade 2 or 3 patterns, 3 to 4 patterns, and these are the patterns I'll be covering in this video. I will not be covering all the patterns, even though I'm still going to make another video where I'll talk about like 10 of the chart patterns that we have in the market. But for the sake of this video, I'll be sticking to 4 of these patterns. The first one I'll be talking about is what we call the double top pattern. Double top pattern is simply about a pattern that we usually see in an uptrend, which is a reversal pattern. So this is a clear uptrend, as we see. Then in an uptrend where we see a double top pattern like this, it is signifying that the market is about to reverse and the trend is about to change. So double top patterns simply insinuate that in an uptrend we have a double top, and this is what a double top looks like. The market is going in an uptrend and a high is formed, then the market reverses. And you know, in market structure, when the market reverses like this, you expect a new high to be formed. Then the market goes up and the market fails to make a new high. So the market goes up and make a stop around here, or it even comes up here and stops and starts reversing. So that is what we call a double top pattern. So it simply signifies that market has been going up in an uptrend, reverses a little bit, and when the market reverses, you expect the market to form a higher high, but instead of forming a higher high, it created a lower high, or a low, anyhow we call it. So that is what they call a double top formation. So if you look at it critically, you will see that this is the first top and this is the second top. That's why we call it a double top. Then we also call it a M pattern, because it looks like the letter M. So we call it double top pattern, and we call it a M pattern. Then we have something we call the neckline. So whenever double top pattern is formed, this place where the market reverses to is what we call the neckline. We call it the neckline, and it also serves as a support pattern. So how do you trade in double top pattern? It is simple. You wait for the break of this neckline. You wait for a situation where this neckline will break. Then most times you wait for a pullback and enter a short. Even though most of the time the pullback does not happen, and the way I trade this pattern is that I look for the candle that breaks. I look at the candle that breaks the neckline. If it's a momentum candle, a candle that has a lot of momentum in it and is very strong, I enter at the break and put my stop loss somewhere around here. My stop loss is somewhere around here, and my target would be the next level area on the chart. So that is how I trade the double top pattern. And most of the times, if the candle that breaks the pattern is not a momentum candle, let's say the candle does not have a lot of momentum in it, I wait for a pullback to this area before I enter here. So that is how I trade the double top pattern. And if you look at this double top pattern, if you look at the double top pattern, you would see that we have a lot of examples of it in the chart. So if you look at this chart, the market has been in an uptrend, going up and down. Then it reached a top here. When it reached the top, the market reversed from this top to create the neckline here. It went up again, but it could not continue pushing up, so the market started dropping. So this is, looking at this particular example, this is the neckline. This is the neckline right here. This is the neckline, which also serves as a support. And when the neckline broke, what happened? The market started going down. And you as a trader, you enter at the break of the neckline, especially when the candle that broke the neckline is a momentum candle. Put your stop loss around here and put your target around here, because this particular area is the next level target. If you look at the chart using the support and resistance strategy that I have talked about later, so this is going to be your target for this kind of trade. That is basically how to trade the double top pattern. So after the double top pattern, we have what we call the double bottom pattern. Double bottom is more like a double top that is flipped around. So if you flip the double top, it's going to give you double bottom. And this is how the double bottom simply works. It's more like the market is in double bottom. Also is a reversal pattern, more like the market is in a downtrend, more like having a market in a downtrend. Right, so for the double bottom formation, it's more of like the flip side of the double top. It means that the market is in a downtrend. Double bottom is also a reversal pattern. The market is in a downtrend, and the market creates a new low. Then a reversal happens. Then the market tried to go lower, but it could not go lower, and it got stuck maybe around here, or even here, or even sometimes it goes a little bit lower and it refuses to go down. So then we have something like this. So once this happens, we would have this place called the neckline, which is also the form of a resistance. You know, in the double top it was a support, but here it will be a resistance. And I'll trade it just like when the market breaks this resistance or the neckline with a momentum, I'm going to be entering immediately. I'll put my stop loss somewhere around here. My stop loss will be somewhere around here, and my target will be the next level target. So this is exactly what we have in this chart. If you look at this Solana chart, you will see that this is a clear double bottom formation. The market was in a downtrend. Market came down to this place, reversed to this neckline, came down again, but it could not threaten the previous low. Then the market started moving up from this neckline. So like I said, when it comes to double top, if the market broke the neckline with a momentum, I'm going to enter immediately. But you can see here, the candle does not have a lot of momentum in it. So in this case scenario, I'll be waiting for a pullback, just like I said, with the double bottom, with the double top rather. I'm looking for a pullback. When the market breaks, then a pullback to this level again before I shoot up. So my target would be the next area of support. My target will be the next area of support on the chart, which would be somewhere around here. This would be my target. Even though I took this trade, but I didn't trade the double bottom. Actually, I took this trade just like on the 25th of January 2024. I took this particular trade, but I missed out on this entry on the double bottom. Then I caught another entry around this area of value, area of support, which could have been my initial target if I had traded this double bottom. So this is how to trade double top and double bottom. The next one is head and shoulders and inverse head and shoulders. Head and shoulders simply pretty much looks like double top and double bottom, but I think we can find that in BTC chart. BTC formed a head and shoulder in 2021 when we had, let's look at the daily time frame, when we had Bitcoin reaching an all-time high. So head and shoulders simply is something like this. It's like when you have a situation where the market when you have a situation where the market is an uptrend, head and shoulder is also a reversal pattern. It's like this when you have a situation where the market is in an uptrend, then you have a situation where the market is in an uptrend, the market moves up, then comes down, you have a situation where the market is an uptrend, reverses a little bit, then make a new higher high, reverses, then at this point you expect the market to make a much higher high, then comes to this place and start dropping. That is what we call a head and shoulder. If you look at it, you will label it, this is the right shoulder, this is the left shoulder, this place is the left shoulder, this is the right shoulder, and this is the head. That's why we call it a head and shoulder. And also this one also has a neckline. So the logic behind this kind of pattern is that the market was pushing up, pulled back here, made a higher high, and when the market make a higher high, what you expect is that you don't expect a pull back to this place again, even though it happens once in a while, but you don't expect a pull back to this place again. But when you have a pull back to this place, you expect a much strong movement, and you expect the market to make something very much higher. But then the market could not threaten this previous high, and then it stops around this place, and you say it has made a double top. This is what a double bottom also looks like. In a double bottom, the market in a downtrend made a low, pulled back, made a lower low, then pulled back to this place or around this place. Then you expect it to make a low that is going to be lower, but it could not. Then it stopped around there and started reversing. So you see this one is a double bottom, and this is the neckline. So I trade the double top and the bottom just like I trade the head and the shoulder. If the break of the neckline came with a very strong candle, a momentum candle, breaks with momentum, I'm going to enter immediately, put my stop loss somewhere around here, because I don't want to be risking too much, somewhere around here, and the next target will be the next area of value. Same thing, but if it does not break with momentum, then I would be expecting a pullback. If it breaks like this, I'll be expecting a pullback. I'll be expecting a pullback to this area of neckline before I start shorting. So that is how I trade both the double top and the double bottom. So let's look at this BTC chart and look for where we could get a double, sorry, not double top, not double bottom. I mean head and shoulders and inverse head and shoulders. On BTC in 2021, we had something like a head and shoulders. We had a situation whereby the market was in an uptrend, pushed up, came back, market pushed up, came back here, pushed up again, came back, then tried to push up, but it could not threaten the previous high and started dropping. So when it started dropping, the market formed a neckline around here. Market formed a neckline around there, and you are going to enter at the break of the neckline if the break was with a momentum candle. And where would your target be? The target would be the next area of value. And what happened? The market broke the neckline and smashed this area. That is pretty much how to trade the head and shoulders and also the inverse head and shoulders. So it's pretty much the same thing. Head and shoulders and inverse head and shoulders is just the same pattern, just that head and shoulders form when the market is an uptrend, and inverse head and shoulder form when the market is in downtrend. And also for the double top and double bottom is a reversal pattern that forms when the market is an uptrend, and double bottom is a reversal pattern that forms when the market is in a downtrend. So that is pretty much how to trade these two, or just 4 particular patterns. I hope you got value from this video. Ensure you hit the like button, subscribe to my channel, and I'll see you in the next video. And also, if you would like to learn much more about how to trade the cryptocurrency market, ensure you get my 10x cryptocurrency mastermind, which is a mastermind, a mentorship course for $100 that is going to teach you how to trade the cryptocurrency market to become an expert. You learn my strategy, the smart money concept, risk management, and trade psychology. You can find a link together in the description below, and I'll see you there.